All right, guys, sorry for the delay. We're getting started here in just a moment. With Bitcoin's halving in our rear view, what opportunities are next? Find out in today's exciting episode of Breaking Bitcoin. Welcome back to Breaking Bitcoin. We are live every day at 12 p.m. Central Standard Time. Your daily source for everything cryptocurrency markets and personal finance. I'm your host, Justin Wise, lead analyst at crackingcryptocurrency.com, broadcasting to you live out of the uranium-shielded above-ground bunker today to prevent against the coronavirus pandemic. Today is May 13th, 2020. Hopefully all of you guys are doing fantastic wherever you happen to be tuning in from, whether you're watching us on YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. If you guys are new to the channel, make sure to subscribe and hit the bell icon because that's the only way you can be notified when we go live. And don't forget to like the video if you enjoyed the content. Before we begin, obviously, we have the halving in our rear view right now, and fundamentals like that event, as well as Ethereum's upcoming 2.0 network upgrade from proof of work to proof of stake, are going to bring a lot of excitement, a lot of new individuals, a lot of new market participants into the market. And everybody wants to generally start trading the markets the way that they hear everybody tell them to, or the way that they hear the news tell them to. And that is with their gut. And that generally does not work. And if that describes you, there's never been a better time. If you're watching these volatile price movements go on and you're just being left in the dust, there's never been a better time to sign up to our community and begin building not a gut-driven strategy, an objective, data-driven trading strategy that you can backtest, that you can forward test, that you can understand works reliably. You can receive our education, signals, mentoring, and our community at premium.crackingcryptocurrency.com. Click the link in the description down below. It's also there. Again, that's premium.crackingcryptocurrency.com. If you guys have not already, make sure to go check out the John Eller's interview. One second here. I just realized that I did not mute myself there. That is probably driving my team crazy because they're hearing me coming in two areas. Okay. If you guys have not already, make sure to go check out my interview with Dr. John Eller's fantastic interview. It's available on our Crypto Currently playlist. Make sure to go check that out. We talk about back testing, forward testing, digital signal processing, Mesa, lots of stuff. If you're an interested technical trader, make sure to go check that out. Also, there is enough time. It is not too late. It's not too late to participate in Spectre Security Coin's Data Hunt event. Go to datahunt.spectresecurity.io, Spectre datahunt.spectresecurity.io to sign up and participate. Win some free crypto. Link is in the description down below. With that being said, so much to talk about today. Hopefully, you guys are all doing absolutely fantastic. Let's hop over into the live stream because there is some interesting things going on with Bitcoin's price today, and there's a lot that I want to cover. So let's go. All right, here we are in the live stream. We've got the daily chart, BTC USD on Bitstamp, because Bitstamp is fun, friendly, it's reliable. It's there for all of us. Now, retail interest in Bitcoin is picking up. We can determine this by looking at the number of new non-zero balance wallets that have been created over the last 2 days. We can get those metrics from Glassnode. Let's go take a look. So again, and we can take off the 7-day average. Actually, here we go. We can actually see a spike over the last 2 days of new addresses that have been created, about 100,000 new addresses. It's grown a little bit more by $100,000, or $100,000, we wish. New addresses have grown a little over 100,000 in just the last 2 days. Active addresses are up as well. Now, one metric on Glassnodes that I've been watching and I've been talking about is the ASOPR. This is the adjusted spin output profit ratio. Here we are. We have dipped into the negative territory for the first time in a while, and we can just drag this chart back here a little bit to encompass kind of all of 2018. And generally, we can see that when ASOPR is below a ratio of 1, we tend to see price begin to trend down. We begin to see price trend down, as well as, I will also note, that the last time that we reached this level of the ASOPR was right before the top at 10, a little bit above 10,000, around 11,000, and that began Bitcoin's price decline leading into the March meltdown. And of course, now we have a kind of, one could argue, baked in fundamentals such as the Bitcoin halving that is now in our rear view that can be utilized by newspapers and the media and cryptocurrency YouTubers to justify why price did the thing that it did. And this is something that I commented, over the weekend. Nouriel Roubini came out and said, well, Bitcoin's price moved down 15% off of no news. What a manipulated, rigged whale market. Blah. Breaking news. Old men yell about Bitcoin because they got left in the dirt. Also, see Peter Schiff. And the reality is that, it just shows to me, if you take that on its own, if you take that at its face value there, it just shows the bias of these individuals, that there has to be some news to move price. It is completely glaring of technical analysis. It is completely glaring of the fact of actual market dynamics. The reality that price is dictated by market participants and not necessarily news. It also is not understanding of where Bitcoin is at with its spread of adoption. So there doesn't, the reality that the idea or the bias that if price makes a big move, there has to be something on Bloomberg, right? No, price can move without there being anything on Bloomberg, because Bloomberg is always going to be there after the price movement. You have never, ever in your life turned on Bloomberg, turned on CNBC, and gotten information and been able to get into a trade or take action in the financial markets ahead of time. They're always there to tell you what happened and why it happened. They always point to something that explains why price moved. But in reality, those movements do not generate the movement. Excuse me. That news, those fundamentals do not generate the price movements. The news doesn't generate the movements. The news comes after the price movement to attempt to justify why the price movement happened. And you can see that in Bitcoin. The price movements happen and the news comes out afterwards to try to explain why it happened. I would say that the one difference is here in Bitcoin is that we are still such, a relatively small community compared to traditional financial markets, that you can actually receive fundamental news in advance as a retail trader that allows you to front run the markets, just like professionals would in traditional markets, because in traditional markets, financial information is kept, tight and encrypted and secret and not known until the price movement happens. And then the report comes out on Bloomberg and they're like, well, if people would have just read this obscure report, that was not publicly circulated that came out from JP Morgan 2 months ago about the price of silver and the overall collapse of the economy, then certainly you would have been able to make money on the silver trade. Yeah, that's right, Jill. And of course, all the silver traders that knew this are banking into debt. You actually can get that information in cryptocurrency, in the cryptocurrency markets. Okay. All right. So the raw metric on ASOPR trending down below, as well as its 7-day moving average, right? And again, as I said, the last time that we saw that peak in ASOPR, we began trending downwards and it marked a topping point for Bitcoin's price. Once Don Camden said, "Show me the chart, I tell you the news." Now, I read a couple articles this morning that hash rate was at an all-time high, and that's not true. Hash rate is not at an all-time high. We can see this from Glassnodes. We can also see, so the information on blockchain.com is incorrect to the best of what I'm able to determine, because that is the only website out there that is showing an increase in hash rate. So both Glassnode and Quandl, so both Quandl Metrics and Glassnode are reporting a decrease in hash rate for the second consecutive day. All right, so here's hash rate on the 10th. Here's it on the 11th day of the 10th day of the halving, or 10th day before the halving, 11th day of the halving, 12th as of yesterday. So we are currently seeing a 2-day dip in hash rate following the halving. Right now, we haven't seen a massive decline yet. Minor capitulation is far from a sure thing. We covered, it is the most logical thing. We've covered this for months leading up to the halving, and we covered the contrary opinions as to why the halving might not occur, or excuse me, not why minor capitulation might not occur yesterday. We definitely hit those arguments and went over them, but we do have to monitor this metric very closely. Right now, average block time has adjusted so far to the new block reward. Blocks are coming in reliably, not quite yet at an average of 10 minutes, but fast enough that we don't need to be concerned. And I will say this, that we can see miners acting very, very quickly to adjust to the new normal of the new block reward. And we can see this because right after the halving, blocks were coming in relatively slow. And, 24 hours up to the halving, blocks were coming in very quickly ahead of schedule. So miners were attempting to kind of front run the actual halving event. And then as we creeped into the last few hours of the halving, particularly the last hour, the time between blocks slowed down. So, and we can see this from, let's actually go over to, here we go. We can see from the Bitcoin difficulty adjustment, the Bitcoin difficulty estimator over here. This is diff.cryptothis.com. I'll post the link in the chat and ask that one of the team members put this in the description as well. This is an interesting site. Just this morning, early this morning, these metrics were next difficulty change estimated to be between 4 and 6% or 5 and 6%. And now it's come all the way down. And we were on some 50 blocks ahead of schedule. Now we can see that our current pace is only 2% ahead of schedule. We're 30 blocks ahead of the blockchain estimated mining rate. And the next difficulty change is estimated to come in on Monday, around Monday afternoon, Central Standard Time. So about 5 days, 2 hours, 38 minutes. And that difficulty adjustment is a positive difficulty adjustment. Difficulty is going to rise 2.13% to 2.48%. So it is interesting to see how quickly these metrics are changing. Keep your eye on this metric as well, because a lot can happen over the next 5 days. Don Camden is also the originator of Veni Vidi Vici. He bought Bitcoin at 19K and he got liquidated. Careful with that margin, my friend. Now, one popular metric is kind of exchange inflows and outflows. Now, I monitored these this morning and they are roughly equal. So I don't really see any directional bias to glean from that data at this point in time. Again, we'll go look at Glassnode for that. Somebody pointed me out to this. I do keep my eye on exchange inflows and outflows. So here we can see inflow totals. And I do like to look at the 7-day moving average when I look at these because it does smooth the data. So here's the 7-day average on exchange inflows. And we can see that inflows did take a big dip. This indicates generally accumulation. When inflows are going down, price generally moves up, or it's bullish. We can see that inflows are on the rise. However, outflows look exactly the same. So not a huge deviation to be gleaned from this, right? Now, one thing that is interesting and is going to come into my argument for price here in just a little bit, and of course, this went out to the premium members earlier today, is derivative daily volume. So I want to look at the raw, not the 7-day moving average. All right. Now, look at the volume yesterday. Volume is down quite a bit, almost 50%, a little bit more actually. Not almost, over 50%. Yesterday is below $10 billion across our major derivatives, and that's coming off of an average of over $20 billion per day prior to that. This in conjunction with the fact that price has moved up with declining volume is not very bullish to me. It indicates that bulls are being far too passive, although they are pushing price up. We are having positive closes. We're not roaring at the gates. We don't see an explosion of volume, and we've just come back up to a dynamic level of resistance, and I would expect the bears to take control. It seems more likely here, particularly if we look at open interest, which continues to remain flat, up about a little up almost 1%, but still not seeing, exponential growth in open interest. Perpetual funding rate also remains negative, as well as predicted funding rate has just gone positive, actually, which is not necessarily a good thing. Now, overall, as I said, yesterday's trading day was, just far too calm and passive for the bulls, right? We've put in 2 days of upside movement. We are coming back to a dynamic level of resistance. And the onus here is really on bulls to continue pushing price up, which I would not say they've been able to do very aggressively. Again, as I said, we're coming back to a dynamic level of resistance here. And one way to look at this is that, well, look, bears aren't able to push price down any lower, and look at the bulls taking control. And that's not really how I look at the market. I look at where, if we're talking about price action in relation to some form of mean or median, price is down, and bulls are not able to push price up as aggressively as bears were able to push price down. And bears are able, even though bulls are pushing price up, they're not pushing past any, I would say, control zones of the bears. So we're kind of right at a critical junction point right now. We had a positive close yesterday, but market sells were greater than market buys by nearly 3% as of yesterday. So if we do not see a big influx of volume or buying pressure, then I think that right around these levels, the bull steam is going to cash out, and we are going to see the bears take control of the market. Again, the bears still have control of the market. Just because price is moving up doesn't mean the bulls are in control, right? Most analysts will just say this, it's a green candle, the bulls are in control. No, you have to look at the larger trend, right? And I think that Bitcoin is going to slip from its current level of support. And again, this is in conjunction with that significant decrease in trading volume yesterday. And if we look at traditional equities did not have a good day yesterday. Let's look at the SPY. Here's the SPY futures right here. We had a terrible close yesterday. This is the ES, this is the CME minis. We gapped down today after a little bit of a brief surge up, and we are just selling off, right? And again, this is kind of interesting because Bitcoin is acting as a leading indicator for stocks, right? Bitcoin is topping and bottoming before the traditional markets do. And Bitcoin, I would argue, has topped locally. So I think that we are going to see stocks continue to take a tumble. I think that we are going to see Bitcoin lead the stock market down. And if you want to know when a good time to buy equities is, you should watch Bitcoin to see when Bitcoin bottoms out, right? Particularly moving into the last hour, we had an explosion of trading volume into the last hour of traditional market close yesterday. And the major indices closed down yesterday, anywhere from like 1.8 to 2.3%. The NASDAQ, the SPY, the Dow, and VIX spiked 20%. 20% VIX is up. And this is indicating that investors are getting very, very, very skittish. And again, I think that we can see Bitcoin leading the market as the prime reason and cause for this. All right. A few quick notable mentions before we get into a more detailed price analysis. This is BN Crypto put in a statement. I do like BN Crypto's coverage most of the time. BN Crypto put out a statement regarding Google's latest core algorithm update, and me just saying the word Google has probably just gotten this video shadow banned. So make sure to hit the thumbs up button. So we'll get this video out there. So this algorithm update is affecting more cryptocurrency commentators. So I've stated this before. We're not seeing a huge decline. In fact, I would argue that trending, we are seeing an increase in people who like our channel. But we have noticed a drop in traffic, especially to our website. And we do SEO via Google. So that's one of the reasons for that. And of course, we've gone through issues of potential shadow banning here on YouTube. And Be In Crypto today, cryptocurrency news outlet, they reported that they've seen their volumes via Google and YouTube decimated with this latest Google update. So, again, I appreciate all of the support. We're very healthy as a channel and as a group and as a community. The reason for this is that we've largely decentralized our content. We are pretty, I'm not going to lie, we are pretty reliant on YouTube as a platform to get our daily show out there. But you can always check us out on DLive, Twitch, Facebook Live, and on Roku with the Investor News Channel app. And we are going to be restarting the podcast, so you'll also be able, again, soon to catch us on Spotify, Apple Podcasts, Google Podcasts, Stitcher, Podbean, all your favorite podcast catchers. So hopefully we'll be getting that set up. And that's going to be the full video show. And yeah, that is... it's a little expensive, but it's worth it. It's one thing to put up an audio-only podcast. It is kind of expensive to rent the storage space to put out, our video content, a 1 hour to 2 hour show every single day at high quality 1080p. So yeah, appreciate the support, guys. But listen, it's really important. I just want to make this case that it's really important. It's not just us. It's all of the content creators out there. If there are content creators, we're unique in the fact that we're all profitable traders. The staff at Cracking Crypotcurrency and the team that makes up Cracking Cryptocurrency. Not all of us, but we have devs that don't trade. But a lot of content creators out there don't have an alternative source of income. A lot of individual content creators rely on their revenue, whether it's from YouTube or from ads or from whatever else, to be able to support them and allow them to make their content. So, just keep that in mind. It's very easy to be critical of, your content creators who run ads, your content creators who do this or that. Just keep in mind that they have to keep the lights on and they really need your support. So again, not just me, but for whoever you support, remember that it is us, it is to a degree us v them, right? Even if you don't agree with your kind of content creator, I'm sure you guys still probably have much more in common than you and CNBC. So keep that in mind. A united community is strong and is hard to shatter, but a divided community falls apart relatively quickly. All right. I have to mention this. Craig Wright's evil plan to save the world. I've, of course, am fairly critical of Craig Wright. This depends on where you fall with the scaling debate. Craig Wright is not Satoshi Nakamoto. And unfortunately, the bid to make him Satoshi Nakamoto was part of a power struggle, but I digress. Craig Wright had an evil plan to save Bitcoin, or Bitcoin SV, that is. So Craig Wright, in the run-up to the Bitcoin halving, had made threats, particularly on a Slack BSV board, that he was going to crash the network. He said, quote, I plan to sell a large volume of BTC for USD. This will occur on a single exchange as a rolling iceberg order, followed by significant orders of other exchanges. It is expected that the value will drop significantly and will be matched by a 10x leverage short. And this article continues on that Wright professed his intention to simultaneously launch a 51% attack on the Bitcoin network. Of course, 51%, I'll just read this, that is where a mining farm has so much mining power that it takes control over the network and is able to censor transactions and temporarily reverse them. Such an attack is exceedingly difficult and very expensive to do. Masari estimates that it would cost $425,000 American per hour. So he was going to, try to take control of the network and revert the network back to the old thing where SegWit transactions would not actually go through and get processed. But, so Craig, after claiming all of this, big bag of hot air, in my opinion, the halving has come and gone. And although price hasn't really gone down, right? price went down prior to this, but again, we got bid up. And although I am bearish, I don't think that Craig Wright was behind this, right? Perhaps, and again, I am paraphrasing this article, but perhaps he was distracted by his multiple lawsuits that are currently going on. So, anyways, the other thing that I want to mention before we get into price analysis is Uniswap. So last night, yesterday, and I talked about this in my my analysis that went out this morning. So yesterday, I didn't do Money Monday this week. Normally, I sit down every Monday and I make new investment allocations. This is just in the realm of classical investing, do dollar cost average into things. So I typically buy cryptocurrency every Monday for long-term investments. I traditionally buy stocks every Monday for long-term investments, as well as just anything else that I'm kind of researching. And sometimes, I'm not going to lie, my opinion has been the same since I was in my young 20s. I'm a minimalist, so I live fairly frugally. So I take any excess money that I have that would normally be spent. Most people would spend this on going out or eating out or buying a new TV or this or that or going on, whatever. I put that money into the market. And over time, I've been able to build long-term positions. Now, I'm not going to go into, I did tell the premium members exactly what tokens I bought last night because I did buy some new crypto, but I did buy some, I bought 32 Ethereum last night. I think that's just a pretty good, I had kind of slacked on my allocation to Ethereum. And again, I think that Ethereum 2.0 is going to be a pretty big thing. So I just want to have a nice allocation of Ethereum. But last night I did participate in the Uniswap exchange for the first time. And I found the experience quite pleasant. I utilized my Ledger hardware device connected to MetaMask to participate in the Uniswap exchange. I swapped some Ethereum for some tokens that I was interested in accumulating. And then I turned around and added those tokens back into the Uniswap liquidity pool so that because I plan on holding those tokens for a long time, so that I can receive portions of the transaction fees associated with those tokens. So, Uniswap, of course, is a decentralized exchange. It's actually the largest volume, it's the best decentralized exchange by volume. So pretty neat, pretty intuitive, pretty easy to use, very minimalist interface. It wasn't immediately intuitive exactly what to do with it. I did read an article. I just Google searched how to use the Uniswap exchange and read through that and talked to some friends that utilize the Uniswap exchange. And it gave me, once you spend an hour of looking into it, and it's very intuitive how to utilize it. So I had a very pleasant experience. Uniswap has this really cool feature where not only can you swap whatever you want to swap for whatever you want, just like on a traditional exchange, there's no order book. There's a pool of liquidity, and depending on the size of your order, the cost per unit is scaled to meet. And in fact, it's perfect for retail traders. It's perfect for retail investors. It's perfect for individuals looking to kind of accumulate positions and not whales, because it is prohibitively expensive because of the algorithm that runs the Uniswap exchange. The cost of the order does scale exponentially the larger that it gets. So it's perfect for, making, weekly or monthly allocations into cryptocurrency. I really, really, really enjoyed it. So check that out. They charge a flat 0.3% fee for all transactions. You don't have to sign up. There's no registry. I don't have an affiliate code, nothing like that. It's a decentralized exchange, uniswap.exchange. Do some research, make sure you understand what you're doing. And again, you can integrate your Ledger with your MetaMask. And it was as I said, I just mentioning it because it was the first time I actually participated in the Uniswap exchange last night. And I found it pretty pleasant. And again, the cool thing is, you swap for your tokens, right? I swapped Ethereum for my tokens, and then put those tokens back in to the liquidity pool. And again, the analogy is not quite correct to staking or mining. You do receive rewards paid out in the token and Ethereum, but it is the transaction fee associated with it. So it's more like, if a friend signs up with your Binance affiliate link, you get a small percentage of their transaction fees from Binance, to incentivize you to go out and do this viral marketing for them. So it's more like that, right? You receive transaction fees for the liquidity that you stake, and you provide liquidity to the pool. And as long as the Ethereum network runs, theoretically, Uniswap will always run, needs no input. There's no market makers, no centralized command and control. Everything is automatic. Everything is algorithmic. So really, really cool. Blue Box says Justin's going to forget about Bitcoin and join the one true power Ethereum. No, I mean, I'm very supportive of Ethereum. I'm a little critical of decentralized finance. Like, as I've said, like, this isn't a large amount of money that I put in a Uniswap. I don't think that it's a good idea for people to put a large amount of their hard-earned money into experimental protocols. But I am participating in these experimental protocols with, relatively conservative amounts of capital, right? So, I didn't throw all, like, for example, tokens that I'm staking on there, like, for example, Holochain. I am providing Holochain to the Uniswap exchange as liquidity. And not all of my Holochain, but I had Holochain that's just been sitting around for a long time. And so I put, like 25% of it into the Uniswap exchange. So pretty neat, pretty cool. All right, with that being said, here we are on the daily time frame. And of course, I put out this analysis. I just took a new short on BTC. As I said, we do have declining volume moving in as Bitcoin pushes up on the daily time frame back to the daily baseline. This does justify a reversal baseline bounce setup type of trade. This is where Bitcoin is in a bearish trend and corrects. So when Bitcoin is bearish and then moves up, that's considered a correction. When Bitcoin is bullish and moves down, that's considered a retracement. And savvy traders, utilizing a 3 screens approach, can utilize these opportunities to re-enter and trade in the direction of the dominant trend. As we have broken below the baseline and as we have broken below the breaking Bitcoin initiator, the trend has flipped bearish. So opportunity, when price moves up now, I view these as opportunities to scale into a larger short, which is what I've done. I've added another 1% risk to my short position on Bitcoin. We have hit the daily baseline. We've rejected from it so far. We'll look at some other time frames here in a little bit to navigate this more forward. Current take profit target zone is down between 8,600 and 7,716. Invalidation around 9,700. And the nice thing about this setup is that the risk to reward is quite good because, of course, if Bitcoin closes above the daily baseline, it does invalidate short trades and it does flip the trend to the upside now. Now, that hasn't happened yet. I'm not actually expecting that to happen. But as a technical trader, I will just allow the charts to dictate my trading decisions because that is how I've been consistently profitable over the years. So I really don't care which way Bitcoin decides to go here. I'm no longer spot long. I'm hedged and I am active short risk position. So, and I've just, again, added to that as we now have a nice setup for a reversal baseline bounce to short a correction in Bitcoin's price as we are beginning a bearish trend. Parallax is still bearish. This is our long-term trending momentum oscillator, which lets us know the divergence between the relative strength index and the commodity channel index. It is hinting at further bearish decline. Minx has put in another bearish signal. Of course, Minx crossed below the 0 line the other day. And of course, it's been below the noise line or the signal line. And now the noise line itself has crossed below the 0 line, indicating that the longer trend of Minx has also become bearish. We do not have rising explosion level anymore, which is fine. This is totally fine. And in fact, one thing that I'm going to do, because I'm not displaying it on the chart right now, but last night, myself and the team spent about 4 hours pushing the latest updates to the Wadatar Explosion Strategy Tester. This is a strategy tester that is available for premium members. And this afternoon, we have our community mentoring session for premium members. It's a 2-hour session every Wednesday where all of the premium members, myself and the entire analyst team get together and we discuss strategy and setups and technical issues. And we talk about fundamentals and we talk about strategy. So it's a fantastic experience. Today, we're going to be diving into the Wadatar Explosion Strategy Tester pretty deeply. And we're going to be talking about kind of a 2-step approach to building strategies. And, we had kind of gotten, we were working obviously on our automated strategies. Cybot, we had to turn off to deal with a few, mostly issues coming from Binance, but those have been fixed now. And we're just doing the walk forward optimization on Cybot again, and we'll be launching that back live on Monday. Interestingly enough, and I am kind of apologetic to the premium members, the results, while it's been down, have actually been really, really, really good. It's got a good hit rate, and the trading results have been good. So I'm eager to launch that back on Monday. This was kind of necessary because anytime you launch a new product, you're going to have some bugs, and you get to patch these, and the product just gets better and better and better. And building profitable automated strategies is not a simple task. So that's something that we provide for our members, and I'm eager to get that back up live and running. And now we have this really strong code base. For strategy testers moving forward, which makes it actually much easier for me now to follow through with what some of the members have asked for, such as publishing the Mink strategy tester, or publishing the Parallax strategy tester, or making, custom strategy testers for individuals. All right. So with regards to that, obviously we have the false positive filter for the new version of WADA explosion that's in the strategy tester. I'm not currently using that on my live chart. But that is going to be an update that I push. And the very last update that I pushed last night before I went to bed was a new entry condition, which is rising explosion level, and a new exit condition, which is falling explosion level, which, by the way, generally produces pretty good results. So make sure you guys go test that out. Update your latest code base. Premium members will see all of the information as well as the update logs in the premium announcements channel, and also on the premium indicator page on TradingView, which only premium members have access to. All right, with that being said, down here on the 4-hour time frame for Bitcoin, Minx is suggesting that we are entering into overbought territory. If we kind of zoom in on Minx, we can see that Minx has been progressing steadily upwards, steadily upwards, steadily upwards. We are now just slightly below the overbought threshold, and right around that same territory of the violent rejection that we had on that pre-halving run up to 9,200. And again, overall, another thing to consider is that we are entering into what I would consider kind of the resistance area, where we rejected from once, twice, 3, 4 times before this last up thrust to 10,000, before this big 15% drop off over the weekend. And this is the area where the sell side pressure is the strongest, and I would expect it's more logical that the bears take control here. If the bulls are able to break and push up above this, of course, we'll know tomorrow because we'll close above the daily baseline, and hey, we'll be bullish again. Pretty simple. But Minx is suggesting that we are getting to an attractive selling area. Again, the last 2 times that Minx reached this area was right here, and we saw this tool, thank you very much. We saw a 3% drop, and then it reached this level right here. And we saw from this high, obviously, we saw about a 20% drop. So we are reaching that level again. Cybot and bottom feeder are both quiet on the 4-hour chart. 2-hour chart, same thing. Cybot and bottom feeder automated strategies are quiet right now. On the 2-hour chart, Minx is showing the same thing. With actually going up into the overbought territory and curling back down. And we can just see the current candle indicating that. We have a bearish engulfing candle. I actually really expect 8650 incoming over the course of the trading day, which would be a return right here to our accumulation level pre this little mini breakout, right? So if you're watching the 2-hour chart, I already hinted at this with the market analysis that I published for premium members prior to the show, talking about my trade setup, and also put out my short. So I shorted near the median of the current 4-hour candle today, or the current 4-hour candle. And yeah, 2 hours is going to be signaling a more aggressive entry into the short, and this does look like a good entry for me. On the 45-minute time frame, we can see this indicated by my ISA spot. ISA spot just signaled its first short signal since the 7th of May. So let's go back and look at the ISA spot signals that we had running up to the 7th of May. Here we have one here, and we do end up getting a 2% drop, and that's exactly what ISA spot is meant to target. And then again, we do get a bad signal right here, but if one would have held on, we do end up declining. And actually what's interesting is the way this is designed wouldn't have stopped out on this movement to the upside. And then we get a ISA spot long signal here. We do get that 1% movement. ISA spot signal here. We get that 1% movement, and another ISA spot signal here at the bottom. We get that 2% movement right there. And we're getting another signal that we just got right here on this candle, and looking for that 2% movement, maybe back down. Conservative target would be Today's point of control around 8,900. Better target would also be 87.47. I expect 87.47 to 86.50 incoming today, actually, is my prognosis. We do see that predicted funding has actually crept into the positive, so bulls are getting a little bit more aggressive at this high, which I think is a bad move. You know, the only thing that I don't like is to see that price is in backwardation on BitMEX compared to index price. Now, generally, when we see that, price does continue to move up. And when price is in a steep premium, price begins to move down. But it's not a perfect metric. It just, everything would be aligning if we were at a premium on price. And that's okay that we're not. It's just, it's only one technical indication that is contrary to everything else that I'm seeing. So, you know, the best thing that you can do is kind of take a mean weighted average of all your technical indicators and say, okay, you know, where's my threshold? If you know, the indications from all my indicators and my analysis is majority bearish, then I'm going to be short. If it's majority bullish, I'm going to be long. And then having a threshold, this is basically what we do in the group. You know, what is the threshold for how many indicators need to be bullish to go long? What is the threshold for how many indicators need to be bearish to go short? And again, SPY not having a good day. Not having a good day. All right, with that being said, we're going to go into today's cryptocurrency segment. I got a lot of news that I want to cover today. So make sure to smash the like button, guys. If you are here, like goal for today is 50 likes. Helps us get this information out there to the people that need to hear it the most. Links, of course, are down in the description to everything you could possibly need in life, as well as what we're going to be covering today. With that being said, let's go. All right, so the billionaire tech entrepreneur Jack Dorsey, in his recent onstage appearance, described how mobile, smartphone-based banking is going to be and currently putting increased pressure on banks and their physical branch locations. And, you know, overall, I need lemon in my water, Sir Justin. I do drink boiled lemon water every evening in my tea. Thank you very much. As Fintech, mobile devices and applications continue to grow, as well as the cryptocurrency landscape expanding. You know, this whole idea of digitally moving money around is continuing to accelerate with more and more fiat to digital money on-ramps, more options, more integrations, and a better user experience for everybody. Now, this raises questions surrounding the future of your local bank branch, which may have started to resemble, currently, a Blockbuster video outlet. You guys are welcome. That's a good one, Jack. Dorsey discussed the future of personal and online banking when he was speaking at the 48th annual JP Morgan Global Technology, Media, and Communications virtual conference yesterday. And, of course, this is the man behind the payment firm Square, social media giant Twitter, and he explained how technology is changing the daily behavior of banking clients by moving core banking functions that they expect and need from the local brick and mortar locations that we're used to your mobile phone. And remember, it was just a month ago when Square, with its Cash App, won approval by the federal government to go ahead and process Paycheck Protection Program applications for small business owners who were trying to qualify for emergency relief funds amid the COVID-19 economic meltdown. We've covered the PPP quite a bit. We covered this topic extensively at the time. Just a month ago, Dorsey offered his company's help to aid the government in the distribution of the stimulus checks here in the United States, highlighting how the fintech firm was waiting in the wings, ready with their existing infrastructure, and that they were capable of reaching, large segments of the population to distribute the money directly and quickly that the government wanted to helicopter cash on everybody. CNBC has since reported that Square's Cash App has been able to disperse funds to 60,000 applicants thus far. making it much faster to do so than any other commercial bank. Now, in the midst of the ongoing coronavirus crisis, Square has rapidly proven itself capable of standing in as the platform to deliver the banking services that people need, right? And want. Now, activity on Square's Cash App has been booming as people have been signing up to receive their stimulus checks as well as their unemployment benefits because Square now offers ACH. Again, according to CNBC, it's been reported that the number of users on Square who are utilizing their new ACH direct deposit has soared from 3 million users to 14 million users in just a few weeks. Now, Dorsey, who was on stage, this JP Morgan Fintech conference, he described how anyone can easily use a smartphone to harness an entire suite of banking services that you would normally have to go down to a brick and mortar, right? And to quote Mr. Dorsey directly, he says, I download this app and I've got a card. I've got a way to hook my payroll to it. I've got a way to buy equities, which I never had before. I can buy this weird thing called Bitcoin, and that's cool. And I can use this card at an ATM. So what else do I need? What else do you need indeed? Right? So, speaking of which, I did buy some Bitcoin last night too. And guess what I used? I used Square Cash. It's just easy, right? Now, this thing was put on by JP Morgan Chase, right? They're the largest bank in the United States. They're also revamping their approach to crypto-focused businesses, right? That are heavily invested in the digital economy and that provide swifter ways of moving value. The bank is now reportedly servicing cryptocurrency exchanges Coinbase and Gemini, which was quite a turnaround, right? As you know, again, this U.S. banking giant JP Morgan Chase & Co. has seemingly reversed its long-held position that crypto is bad. It's now, as I said, offering its banking services to Gemini and Coinbase. This is coming after quite a stretch, right? Quite a stretch. This is coming from Forbes as well. It's an interesting turn of events for JP Morgan as it comes following years of, I would say, institutionalized disdain for cryptocurrency, with the bank's CEO, Jamie Dimon, having been an outspoken critic of crypto since at least 2017, right? According to Bloomberg, JP Morgan has been conducting its due diligence on these two exchanges for several months before they decided to make the move to approve them as institutional grade clients. Now that JP Morgan has adopted these two major crypto clients onto their bank's client role, I would say that this suggests that the big bank may be softening up to the idea of entering into and serving the, this kind of, in a very highly regulated fashion, this crypto to fiat landscape, right? Now, of course, back in 2019, JP Morgan really began to warm up to the idea of crypto, even announcing their ongoing experimentation with their own distributed ledger technology that they dubbed the JP Morgan coin at the time, right? Remember, this was the Ripple killer. This was the Tether killer. By late last year, Dimon appeared to finally acknowledge the competition coming into the space due to the innovation taking place in cryptocurrency. He stated rather famously now, at the time, that crypto and fintech was coming to eat your lunch, referring to his industry peers. Now, despite this newfound maybe bullishness on the future prospects of fintech or blockchain, Dimon took a very bearish view of Facebook's Libra project succeeding or even launching. He said in October that it would, quote, never happen. Now, of course, JP Morgan trades publicly, and its stock has fallen in recent months, but what hasn't? Retreated from its all-time high that was set in December 2019 as early as February, so really front run the market. And by March, in the middle of the market panic, it saw another significant drop. JPM is down about 37% from its late 2019 highs. It's currently trading at about $87. So it'll be interesting to see how their kind of bullish take on fintech and blockchain might be able to boost its share price. We shall see. And finally today, I want to give you guys an update to a drama that we've been watching unfold for months now. And of course, that's the launch of the Telegram blockchain project known as TON, the Telegram Open Network. Now, it was announced yesterday by Pavel Durov himself, the CEO of Telegram. The Telegram is no longer going to be continuing with its blockchain project. And of course, they cited the regulatory pressure from the Securities and Exchange Commission in the United States as the primary reason for the disbandment. Posting the announcement to the official company blog yesterday, Pavel said that it was the intervention by a United States court that ultimately was responsible for stopping the Telegram Open Network from materializing. This statement is relatively short. It opens with a brief history of the project. It states that the company has spent over 2.5 years developing what they call their next generation blockchain platform, powered by a native token called Gram. Now, they go on to describe the fundraising model that inevitably got the project in trouble. Durov used the analogy of investors putting money together to build a gold mine and later kind of splitting the gold that came out of that mine. But, because the United States judge has deemed such a project unlawful, since the investors would sell that gold for profit, characterizing it as fundamentally unfair, keeping to the analogy of here, this is a security. So indeed, the courts appeared to object to the idea of Gram, considering its distribution in and outside of the United States to qualify as an unregistered security. Durov bitterly added that such a court ruling implies that other countries do not have the sovereignty to decide what an acceptable investment is for their own citizens. I would be bitter too if the SEC just slapped me down. Now, Durov appears to hold particular resentment at the power wielded by United States banks and regulators over other countries with regards to the global financial system. I believe he says here, quote, if the United States can use its control over the dollar and the global financial system to shut down any bank or bank account in the world, it can use its control over Apple and Google to remove apps from the App Store and from Google Play. Now, back in March, the SEC won their preliminary injunction in March, claiming that Telegram had sold unregistered securities in the first place, and they blocked the launch of the network and the distribution of the Gram tokens to their startup investors. Back in 2018, Telegram, of course, raised $1.7 billion through its ICO for its TON blockchain. And the project has seen delay after delay after delay, again, due mostly to this intervention by the US regulatory authorities. Now it seems finally the project has gone from delayed status to outright canceled. This latest announcement directly from the mouth of the horse, writing on the Telegram blog. Now, a lot of questions are now in the air, right? OKEX CSO Alyssa Zhu posted to Twitter, shedding light on the worries of Chinese investors into the project, saying, shame, another quality project, the TON blockchain by Telegram, fell down due to regulations, but more worried about the retail investors who subscribed the Gram futures issued as IOU by some irresponsible crypto exchanges, adding that the TON Chinese communities on WeChat were complaining and mourning over the closure of TON, while also raising concerns about immediate refunds of Gram futures. Now, indeed, some exchanges listed TON IOU tokens in advance and in place of the actual tokens due at the launch. Those holding these TON futures on markets popular in China and Asia in general are now left wondering what's next and how to be issued a refund. Short answer, not going to happen. As for the existing batch of TON ICO investors that were eagerly awaiting the mainnet launch and the token distribution, Durov didn't make any mention of refunds and merely signed off by wishing luck to those still fighting for decentralization, finishing his statement with, quote, "This battle may well be the most important battle of our generation. We hope that you succeed where we have failed." End quote. Where's the money, bro? Where's the money? Right? Now, if you guys will recall, investors were extended an offer months ago to either walk away from the project and cash out with 70% of their initial investment into the ICO, or to let it ride for another year and, let this project get off the ground. It's unclear how many took that offer and if it's still available now that the final nail is in the coffin, right? Now, after that, like I said, Telegram. So after that offer of 70% walk away, Telegram offered investors the opportunity to loan that initial investment back to the company in order to qualify for an equity share worth 110% of their original investment in the Telegram, as a shareholder in Telegram in 1 year's time. But is that now scrapped? That's off the table? Of course it is. And everybody, where's the money, bro? Where's the money? Right? I mean, seriously. I mean, I've read like 5 stories on this today. It's all over the news. And we've been covering this for over a year now. But I really want to put this into terms of like what just happened, right? Telegram took in $1.7 billion to develop a blockchain that they're going to launch. Several months ago, they said, okay, guys, it doesn't look like we're going to be able to get this project through. So if you want to walk away, we'll give anybody that wants it, who invested in the ICO, we'll give you 70% of your funds back. Were they bluffing? Right? Because that entails, right, in a perfect world, that if everybody took the offer, roughly Telegram spent 30% of that $1.7 billion on development, right? And they had 70% of the funds left that they could distribute back. They made no mention in their announcement. They haven't answered to questions of how much money is left, how much money is remaining, what they're going to be doing with the refund. Now, to their credit, they are handing over all of their bank statements regarding the ICO to the SEC. So I expect that these answers will come out in the future, but I do think that it is not in good faith that they just left that off the table and they gave an in for people like me to get on their tail and ask them and try to keep them honest, like give the money back. How much money is left? How much money are you going to give back? Were you bluffing with the 70%? Do you only have 40% left, 20% left, 10% left? Hey, we spent it all on stuff that Jordan Belfort would spend his money on? Blue chips? So, listen, it ticks me off when I see investors get fleeced. So I just like to use my platform to attempt, again, with the influence that I have, to encourage people to keep these people honest, right? This idea of like, we're fighting this fight. Okay, well, you could have developed on Bitcoin. You wanted to launch this ICO, took in almost $2 billion to develop your own blockchain that isn't necessary when so many blockchains have already, quote unquote, made improvements on Bitcoin. Everybody wants to make their own blockchain. Everybody wants to copy Blockstream and monetize the blockchain system. It's not necessary. If you really want to make the world a better place, together we can do it, make the world a better place. And come up with some interesting ideas. There wasn't anything new in this TON, Telegram Open Network. There's nothing special about the Gram token. So we'll see. We'll see. But expect stronger worded comments from me. But I mean, where's the money, man? Where's the money? Anyways, let me know in the comments section down below what you guys think about everything that we covered today. We talked about JP Morgan, we talked about Fintech, and we talked about Telegrams. Latest, now maybe turning into a freaking scandal. Let me know in the comments section down below what you guys think about everything, as well as any questions, comments, concerns, sarcastic remarks, or death threats, right? Death threats are acceptable as well. All right, with that being said, back to the charts. We'll take a look at your questions for the day. Shout out to Blue Box Territory, Yorick. We've got Lisa Tiger 89. Dr. Faz, Philly from Manchester in the house. We got B-Flow. We've got Mercia Kolseg. Hopefully I said that right. Probably butchered it. I apologize. Agency, as always, my good friend. Zuhair Nakvi. Good to see you, my friend. Okay, I do see. Sorry, I see a super chat here from Zuhair Nakvi. Sorry, my friend, that I missed it. Thank you so much for the $10 Aussie, my friend. And he says, if you were trading on the Chicago Mercantile Exchange, would I play the baseline bounce to the upside? If so, how does that relate to playing the same to the downside on spot? The CME chart has been keeping me awake at night. You know, the short answer is I don't have the best answer to that question, unfortunately, right? I don't trade on the CME chart, and I don't actually have the backtesting data to trade on the CME as opposed to the spot exchange. I've always done my backtesting on the spot exchange. I've always included weekend data, and I've been able to be profitable. So, you know, this question's come up a few times. I guess my answer, the best answer, is to run your backtest, run your strategy on the CME chart and exclude weekend data, and then run it on spot exchange and see what's better and run the one that's better. And let me know, let me know your results, right? This is going to all depend on, you know, your entry and exit strategy, the baseline that you're using, the volatility filter that you're using, the confirmer that you're using, the time frame that you're trading on. I would expect that there is a good profit opportunity there to eliminate that weekend data and trade off the CME chart. But your answer is, if I was trading on the CME chart, I would have taken the reversal baseline bounce to the upside, and the trade would already be closed, right? The trade would already be closed. So we'll just have to see. You know, I'm kind of married to the spot chart because that's what I trade off of, and that's what I have the back testing results and data from. But that's a really, really, really good question. But I haven't done that work, so the only answer to that question is to put in that back testing work, my friend. And please, again, let me know your results. And thank you so much for the tip, my friend. Hopefully you're crushing it today. Don Candon quoting me: "I lead a frugal, minimalistic, non-materialistic life," while he has a $75,000 golden Rolex on his wrist and wears a $3,000 Versace dress shirt. I'll have you know, this shirt was free. This shirt is only worth $100. Just set it down, man. All right. And this watch was a gift. Watch was a gift. Everybody gives me slack for that. It's a good gift. Go get yourself one. Dakota Watch Company, man. It's worth it. All right, hey, something we haven't done in a while. Let's show some love to the D-Live crowd over here. Dan Leneur and 2 others, thank you so much for the follow over there on D-Live. Let's put some lemons in this basket. Yeah, let's put some more lemons in this basket. Let's put some more lemons in this basket. We haven't done this in a while. Let's put some more lemons in this basket. Distribute those rewards to our friends over on D-Live. So much appreciation to the support over there, guys. Let's see here. Kool-Aid time. Lemon Kool-Aid. Midwest Attempts, the Pie Guy, Squeaky Tadpole, Rhino TD, and Dark Rico. Big winners over there on D-Live. Thank you guys so much for all the support. Ace Hardlight Sam, where the Twitch gang at? Let's see where the Twitch gang's at. Priz Ventures, thank you so much for the 2-month subscription with Prime. Highly appreciated, my friend. Thank you so much for the support. All right. Also, highly appreciated, guys, for the 51 likes over there on YouTube. Thank you guys so much for the support, getting this content out there. That's kind of all I got. It's kind of all I got. It's 109, guys. It's 109. And I would love to do these really, really, really long live streams. But, you know, to be frank, right? But no rewind feature when watching live. Yeah, I agree. All right, I got another question here from Dare Student. He says, Justin, can you give us your 2 cents on recycling and staking coins through smart contract platforms like Tokenaire, Tron Prime, Bankluck, Frag Token, in order to make percentages and get divs? And to be honest, I have no experience with either of those protocols, with any of those protocols. It's not something that I've ever done. I do stake. I do some mining. Excuse me. I do some masternodes, but this is a little bit more, I mean, this sounds a little bit more like, you know, a little bit more kind of cutting edge Ethereum DeFi to me. And like I said, I just used Uniswap for the first time last night. So I unfortunately, I don't have any information on that. I think, here's my opinion. I think that if you plan on holding tokens for a long time, you should look to take advantage of all the opportunities that are out there. So for example, Binance has some cool savings features. So if you've got USDT or BUSD just sitting on Binance, like throw some into that savings account. I mean, they're paying like 7.6% annualized interest. If you're just sitting on that Tether, if you're just sitting on that BUSD, like earn more of it. Binance allows you to stake. I recommend that you do the research and the knowledge to kind of stake on your own, run your own full nodes, you know, all of these things, run your own machines, do everything as locally as you can. But a lot of people aren't going to do that. So there's some cool options out there like Uniswap. Like I said, I got some tokens last night and I turned around and put them back into the liquidity pool so that I can earn on the transaction fees. You know, Tezos, I hold Tezos and I loan my Tezos out to Tezos masternode operators, or however that works, through my ledger, and I get regular dividends from that. So all kinds of cool ways, right? I stake Spectre security coin. I stake X42. Good partners of the show. Yeah, so lots of opportunities out there to earn, you know, crypto dividends. A lot of opportunities out there to earn interest in the cryptocurrency markets and kind of take advantage. Again, do so responsibly. Like, don't put all of your funds into these experimental platforms. Like, ease into them, right? Ease into them. Boris Bitcoin says, will I be taking the primary short signal on the SPY today? It's meeting all my criteria, but I'm hesitant because of Powell's powerful money printer. We'll be taking a look at that in the community mentoring session. Liberty says, where do I suggest placing capital for interest if temporarily out of Bitcoin USDC? Well, yeah, I mean, it just kind of depends on what your risk profile is, what you're comfortable with. Yeah, I think a pretty good opportunity, you know, if you're going to be holding a stable coin, yeah, toss it into BUSD and earn interest because they've got the most interest. And those exchange rates are pretty tight, especially if you're not dealing with lots and lots and lots of money. I think that's pretty cool. I have some BUSD in Binance's savings program. Because, yeah, if you want to hold dollar value, like if you want to earn crypto, that's easy to do. But if you want to hold dollar value, then you're either you either need to play like a delta neutral strategy and, take advantage of grabbing like the funding rates on FTX or BitMEX or something like that, or you need to. I think Binance probably has the easiest one where you lock up your funds in their savings account and then you get those funds back. I think that's the easiest way to hold USD value. Philly from Manchester, thank you so much for the £2, my brother. Have some music in the background. As requested. How's that? But with that being said, though, guys, unfortunately, it's time to go. All right, guys, thank you so much for joining me for another episode of Breaking Bitcoin Market Analysis, brought to you by the Cracking Cryptocurrency Premium Trading Group. We've covered so much today. If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, please leave them in the comment section down below. We'll do our best to get back to you as quickly as possible. Again, never been a better time to sign up, to join our community, sign up to take advantage of our mentoring, our premium indicator suite, our premium trading signals, as well as all of our educational content. You can sign up today at premium.crackingcryptocurrency.com. Link is in the description down below. If you guys enjoy the content, make sure to subscribe, hit the bell icon, and smash the like button on your way out, guys. Highly appreciated. We've covered so much today. We will be back tomorrow at 12 p.m. Central Standard Time to break down the markets, to break down the news, to break down the fundamentals, and, maybe yell at the sky more angrily at foul ne'er-do-wells in the cryptocurrency space. Hopefully you guys have a fantastic day. As always, remember that you guys are on the cutting edge here. You guys are at the front of the front, avant-garde, as they like to say over in France. And you're in the right place. Remember to trade safely and do something excellent today, guys. I'll see you tomorrow. Cheers.